I'm Jennifer Dries, Marketing Director with VRC. We thank you for joining in this morning with VRG leadership, PJ Patel, Sandra Daza, Rajeev Shah, Kevin Chan, and Simon Chan, as they address valuation impacts as a result of the coronavirus pandemic. We hope this update will provide clients and partners with the educational information they need from our worldwide organization to find certainty in a time that is quite uncertain. PJ, I'll pass the floor to you.
Thank you, Jen. We're going to be talking today about the valuation impacts of coronavirus around the world. I'm PJ Patel, co-CEO of VRC and based in New York, and I'll be moderating today's session. Kevin, can you give a brief intro for yourself?
Sure. I'm Kevin Chan from Hong Kong. I mostly do business valuation. I'm a director at JLL.
Simon.
Hi everybody. I'm Simon. I'm also the director in JLL. We do business valuations in the Greater China region and also the Southeast Asia region. We have people in Hong Kong, China, and Singapore. Yeah.
Sandra.
Hello all, my name is Sandra Daza. I'm Managing Director of Gesvalt, the Spanish member of the VRG group, and I'm based in Madrid.
Rajeev.
Hi, this is Rajeev Shah. I'm Managing Director and CEO of RBSA Advisors. We are the affiliates who represent VRG in India, Middle East, and Singapore, about 260 people across this region, essentially focusing on valuation and investment banking and restructuring services as well. I'll bring in the perspective from my region for this.
Okay, thank you. So why don't we start with the economic impact we're seeing in the different markets. Kevin, maybe you can start with what you're seeing in Hong Kong and China.
Okay, so I would prefer to aggregate Hong Kong and China together, and perhaps I can start with the stock market. So in my the conversation, I'll be using the MSCI China Index as a proxy to the overall stock market performance of Hong Kong and China. So to start with, I would start with the date on the U.S. President Donald Trump announced that the trade deal was tentatively done between the U.S. and China back in October 11, 2019. On that day, the index was at 77 points, and today, at the market close, it's actually 75.6. It's pretty close. So there has been a lot of up and down in between though. So since the announcement of the trade deal, so the market has been going up, and the peak was in 17th January 2020. That's 1 week before the lockdown of Wuhan. The peak was at 89.8. That was an increase of 16%. Since then, the market has been dropping. And then the first low point in the China market was on the 31st of January. So the market was at 81.3 points at that time. The drop from the peak was about 10%. And then the market go back up. And then the high point was on the 5th of March. We had about 68 points. But then when the China market sees that the virus has been spreading all around the world and it has become a global pandemic, so the market has started falling again. And we had our lowest point on the 19th of March. The index was at 69.7.
Okay.
So from that was like 2 weeks ago, and then now we are like 10% back, bounce back, and we now have 76. So that's the market change. By comparison, so on the 11th of October last year, the U.S. index was at 2,970, and then we have today dropped by almost 15%. 2,500 points and 40 points. So comparatively speaking, over the same period, the China market has done better than the US market. We mostly think that first, the China market has shown more confidence in the government's handling of the virus, and also they have stronger confidence in their future economic performance.
Interesting. Would you say that you're pretty close to being back to normal then? The stock market seems to indicate that maybe things are close.
I think we can all see that China is actually on the early stage. I mean, they are moving in as an advanced stage in terms of the virus fighting. So they have started early, and we all believe that they have sort of an early ending than the other countries. So perhaps it will also set a good example for the other country, showing the world that perhaps it could be ended in a couple of months' time. So that's one thing. So in China, we are all believing that we are going out of the low point, and then we are going to improve. So we can see that the companies are resuming, industry are resuming, and then over the same period of time, we are seeing that the technology companies are doing good. A lot of people are looking into different ways to maintain their business operations through different technologies. So people are really confident about the future. Although they can see that there is some difficulties ahead, but then they are still confident that they will be able to overcome all this.
Okay, thank you, Kevin. Sandra, how are things in Spain?
Well, things are pretty difficult in Spain at the time being from a health point of view. So we are probably at the worst moment of this pandemic. And regarding the question, regarding the stock market, the IBEX 35, which is our index, reached its annual maximum in February 19th with 10,083 points, when only 2 cases of contagion were reported in Spain. From that moment, the index started a sustained decline, except from some occasional slight rebounds until March 16, when it dropped to some 6,100 points, a level close to that reached during the 2008 downturn. From that moment, and specifically since March 23rd, we have observed a recovery of the index, influenced by the measures proposed both by the government and above all by the European Central Bank. The behavior of the alternative stock market has been similar, with a 43% fall between February 19th and March 16th, wow, and gradual increases since then. Regarding GDP, for example, after several years of sustained growth, although with a slowdown since 2015, the current scenario leads us to expect a significant contraction in GDP in the coming months. In Spain, the volume of public funds mobilized to contain the pandemic has been approximately 9% of the GDP. Of this total volume, 0.5% of GDP accounts for a direct increase in spending, while the rest is destinated to granting of guarantees and credit lines to companies. So there are several forecasts regarding the impact that coronavirus may have on the growth variation for 2020. The Bank of Spain, for example, unlike usual, its quarterly report on the Spanish economy does not include medium-term macroeconomic projections due to the unusual high level of uncertainty. So the report points out that the impact of the coronavirus pandemic will be very pronounced, but transitory. It also demands a more determined action from Brussels. Regarding others like Standard & Poor's, for example, so they say that Spain's GDP forecast has been revised downward in March for the 3rd consecutive time So 2.1% contraction is expected in 2020, followed by a 3.1% expansion in 2021.
Okay.
Yeah.
Interesting. Rajeev, how are things going in India?
Well, things have been as bad as they can be. This is a remarkable slowdown which no one anticipated. Our stock markets, which we measure in India by sensitive index Sensex, it was 42,200, which collapsed to something like 27,040 trading sessions, which the steepest fall in the shortest possible time. So we just entered a bear market in flat 20 days. So it was one of the most savage falls that we have seen. And perhaps the index does not convey the real picture. Since index is reflective of the top 30 or 50 stocks. But the damage which the larger market has suffered is enormous. So stocks are down anywhere between 50 to 80%. And this is on top of the already a weakening performance that we were witnessing in last 1 year. So there was a skewness in the performance. Only the top 15 stocks were performing, and the rest, all the market was not performing. Now, when those 15 stocks gave away, then the whole bottom fell out of the market. So market have been doing fairly bad. We are still early in the COVID-19 period because we are just behind the US and China and Spain and other countries. But the market is learning from what is happening in Europe and US, and therefore is anticipating the worst. So that's how the market is performing. Our other offices in Middle East they are facing even a double whammy. The double whammy in the sense that they are more dependent on the oil prices as well as COVID. So when oil in this market, there is a huge impact on account of all the markets, their budgets have gone for a toss. The oil has collapsed from $50 to close to $20. And all the economies, be it UAE, be it Saudi Arabia, Iran, Iraq, everything has been bombed out. I mean, these economies, for instance, Dubai was dependent on tourism and Abu Dhabi was dependent on oil. Now, oil, the bottom has fallen in oil. At the same time, because of COVID, the whole human situation, the trade, the general trade has been disrupted. Tourism has been disrupted. The markets again have fallen significantly there. So as such, the market is reading too much fear. There is no visibility in terms of how and when things will improve. When we look at the GDP forecast, India was down from last year, it was 6% to about 4.5% GDP growth. And the anticipation from World Bank and other organizations that the next year the growth would be close to 5%. But now, given COVID, it has been scaled down to 2% or less than that. We are amongst the only few countries in the world where they are still showing some minimal positive growth. But I can assure you that even 2% feels as bad as a recession, and the feeling is as bad as a recession, because you are falling from 6% to 2%. And there is general palpable fear in the industry, and people are genuinely worried. And we are still early days. So the whole infection is in very early stage. We are still in stage 2 as per government. So as we move to the phase 2 or stage 3, things could get far more difficult here.
Yeah, Rajeev, it's very interesting. I think the fact that you still have positive growth is very optimistic. In certain industries in the U.S., we're seeing not a reduction of 10 or 20%, but a reduction of 80%. And overall, that's going to have a significant impact on our economy. In many ways, in the U.S., we're still at the beginning of this. In the New York area, I don't think we've quite hit the maximum yet and the maximum impact. And we continue to hear of the situation in the hospitals and the virus spreading. So it's not good from that standpoint. But you all may have heard the U.S. government is spending a lot of money to help support the market, to help support the economy. Maybe each of you can talk about what your governments are doing to help people who may be unemployed, people who aren't able to pay rents and mortgages and things of that sort to help support the economy. Kevin, maybe do you want to start?
Okay, sure. So actually, the Chinese government has not yet announced the full details about any form of fiscal policies, fiscal supports to the economies. But the whole market are expecting them to act, and they are going to perhaps do something similar to what they have done in 2008, where they invested heavily in infrastructure. And then this time, the estimation or the guess is that they are going to invest heavily into the infrastructure for telecom, so that they can expand their growth in the 5G networks. And then on the monetary side, China has been, the central bank has been trying to be loose in terms of the monetary policy. They have been trying to maintain the interest rate low and keep the financing easy for the companies. And then from what we can see is that the government hasn't either announced a very precise number of by how much they are going to expand the money supply. This is very much unlike the US Fed, where they are saying there should be a unlimited QE, but the China hasn't made such an announcement. They are doing it like daily when they are repurchasing, when they are not repurchasing their bonds, or when they are buying back their bonds. And then from what we can see also is that a lot of the state-owned enterprises and the huge corporates in China, they are under the sort of the direction of the government, that they are not firing the staff. They are trying to maintain the employment of the in China. So we can actually see that the unemployment rate projection, a very recent one, is only at 4%, which is up from 3.6% in 2019. So the estimation is quite, I would say, a bit optimistic, but still we can see that the confidence is there. And then we can also see that the corporates are, especially the very big ones, are really cooperating with the government in terms of helping out.
Okay, interesting. Sandra, how about for you in Spain? What are you seeing in terms of the government's support?
Oh, sorry. Well, this is a big issue right now. We can highlight some of the most relevant ones. The government, it's been very active from that point of view. From my personal point of view, there is still some measures to take. It's not enough because the situation is really very difficult, and it's going to be very difficult for companies and for employees. But just to give you an overall idea, on Tuesday, February 17th, the Financial Reporting Council published a guide for companies on risks and other consequences arising from the outbreak and spread of the coronavirus pandemic, where it was anticipated that the book value of assets and liabilities could be affected, and it would be required to perform additional impairment tests and assess whether leases have become onerous. In March 24th, the Committee of European Auditing Oversight Bodies also issued a statement in view of the pandemic impact on the quality of the audit exercise, where it urged auditors to pay close attention to the entity's assessment regarding its ability to continue as a going concern. Okay. In March 18th, the Royal Decree in Spain, which is called 8/2020, on extraordinary urgent measures to face the economic and social impact of the pandemic, was published with the aim of mitigating the economic impacts of this crisis. The most important ones are basically regarding the preparation of annual accounts or financial statements for the year ended December 31st of 2019. So the consequences derived from coronavirus are considered a non-adjustable subsequent event. However, annual accounts or financial statements closed after the end of 2020 would be considered an adjustable event. Companies in general are going to be affected by liquidity tensions and unexpected losses that can lead to commercial or financial solvency issues. During the 2020, the following measures will apply to companies with securities admitted to trading. So the obligation to publish and submit its annual financial report to the National Securities Market Commission, and the account audit report may be fulfilled up to 6 months from the end of the fiscal year. And the ordinary general shareholders meeting may be held within the first 10 months of the fiscal year. There are other measures from the perspective of the labor market. And we are still analyzing that because they were published just yesterday at night. But basically what it says is that all the business activity that is not considered as essential should be completely stopped by today.
Okay. Rajeev, how about in India? Are there economic measures, fiscal, monetary issues that the government is implementing?
Yes, of course. I mean, government and our central bank is in whatever it takes mode. The government has rolled out multiple initiatives. If I can bunch them, the first are the social initiatives. We have a very large population. And a large part of it is still fairly poor. So government has launched a $30 billion program for providing free food to almost 800 million people across India. So free food, free energy. It is to see them through these next 3 to 6 months. So that's a major social initiative that the government has taken. They are pushing more payments to self-help groups. They are doing all the social things that they can, so the poor can see this through, right from providing free food, free insurance, free medical facilities. While the intention of government is very good, but the sheer volume of people and the sheer the enormity of the challenge might throw a big challenge before how and all this can be implemented. In terms of providing help for business, government has provided reforms, or shall I say measures, in terms of extending a lot of these deadlines by a quarter, by having a board meeting or regulatory filing, tax filings. You could do everything can be delayed by almost a quarter. So there are a host of efforts which have been launched, which enable, including tax payments can be deferred, including provident fund payments can be deferred. All the compliance requirements have been reduced or made it more friendlier. So government is launching multiple initiatives. And in terms of monetary efforts, if I can say, our central bank, the Reserve Bank of India, has launched, as I said, whatever it takes mode. So they have reduced the cash reserve ratio by 1%, giving more money in the hands of banks. They have they've given forbearance of all loans for 1 quarter. So even if you don't pay any interest on any loan, whether it is a term loan, the revolver, working capital loans, credit card loans, education loans, you could defer it by 1 quarter, and banks will not have to make provisioning for that. So in order to support banks, they have reduced this cash reserve ratio. They have reduced the repo interest rate by a whopping 75 basis points. So government has, the RBI has put in a lot of initiatives to ensure that credit is available. to the banks and subsequently to the public at large. And they have been practically all liabilities have been deferred by 1 quarter. So that's a major. Government itself is anticipating that this quarter would be a washout, and there are demands for refunds and sort of helicopter money being given to people in the poorer sections. I wonder how much of that would fructify. But the Federal Reserve, the Reserve Bank, is in whatever it takes mode. In some other sense, government is also giving out an indication that this is not the end of it. We are going to do whatever it takes. They're putting in on the health side on a war footing, trying to create hospital infrastructure. They've done a unique thing of converting more than 6,000 air-conditioned trains into makeshift hospitals, which are already, they have compartments, so they have created almost like 10,000 beds overnight by converting all these trains into hospitals. And the whole, once the lockdown has been, all airlines, all trains, the whole country has come to a standstill. So a lot of efforts have been done. Now, whether they will be sufficient is anyone's guess. But yeah, efforts are being made. And hopefully a large part of it would be successful.
Yeah. Rajeev, maybe I'll ask you a follow-up question. Any thoughts on when you expect these restrictions might be lifted and when you might be able to get back to some sort of normal work environment?
PJ, it's difficult to say. We are in very early stage. Yeah. We are in that stage where we have only 1,100 by today's numbers confirmed cases for a country of 1.3 billion people. That's a fraction. That's a very, very small number. So we are ourselves surprised whether the avalanche is yet to hit us, or by God's grace or by circumstances of having a very warm weather, very hot weather, and we maybe little saved by this calamity. So we are not sure whether the calamity is yet to hit us or will escape us.
Right.
So one has that sense of fear. So it is difficult to say whether and when we will be in a business as usual situation. But we have a lockdown till 15th of April. But informal sources indicate that the lockdown would continue till at least 30th of April.
Right.
Now, and if you, even after, and this is not switching you can't switch it on. I mean, even if you lift the embargo and everything on 30th of April, it will take at least a month or two for things to get back to normal. So we are practically writing off this whole quarter. Everyone from businesses to households to government, they're saying that this quarter is going to be a washout. It is difficult to put a date to when we will be back to normal. And next maybe 15 days will tell us whether the avalanche will grow or we will be saved from it. And I wish and pray that
Yeah, Rajeev, it's interesting in the U.S. I think the president was hoping that this would be over by April 15th, and I think just over the weekend is now suggesting April 30th. Simon or Kevin, do you see? It sounds like you may be getting closer to normal than we are in other parts of the world. Maybe you can talk about what you're seeing in China and Hong Kong.
Yeah.
Okay, so maybe now I can, sorry, Simon, you first.
Yeah. Actually, our presidency, we go through the similar process. Presidency would like to resume the business as soon as possible. Actually, several weeks ago, he has already ordered the countries try to resume the business, but due to the situation has not stabilized yet, it has been forced to delay to now. Now is basically the Wuhan city. They lift the restriction of Wuhan city that people can now go out, and also Hubei province. And so he mentioned that the early April everything should be back to normal. But certainly because of the inbound cases, so China is also now is very has very strict restrictions for people to come from overseas. So because it will disturb their plan to resume the business. So we come across the same process where the government want to resume the business as soon as possible, because the economy is very important, and also actually if the country stop running, it will create fear, because you run out of the supplies. So the government would like to resume the business as soon as possible, but we also came across several weeks of delay from his target. So hopefully the situation got stabilized now in China, and so I think his plan to resume the business by early April should be able to be done. Yeah. Kevin, do you have anything?
Yeah, I would like to add that technology data has actually helped a lot in the case of China. So as of today, even in the original epicenter of Wuhan, people are free to move around the city and the different buildings, as long as they can show to the gatekeeper, to the government officials, the police, with a QR code to which a database is linked, and then you can prove using that QR code that you are healthy and you have not been to any of the dangerous area. You have not been in contact with any infected persons. So in terms of the technology and data, we do feel that it has helped a lot in China in the case of tracking down the infections, and also helping to build up the confidence in the people of China that the people surrounding them should be healthy, should be safe, and are not spreading the virus.
Interesting, Kevin. Sandra, how about you? I know it might be difficult because similar to the US, it sounds like you're in the middle of things.
Yeah, that's right.
Yeah.
We are in the middle of everything. We are locked down at home since the 12th of March. So, and we have to be at least, it's reported that we will be at least until the 11th of April. But we all expect that this will take longer. And I really don't believe that we will be partially on a normal basis, coming back to work and so on before the beginning of May. So to be honest, I don't think this will be so quick. We all are waiting in Spain for more economic measures. We believe that this, what Rajeev said, this helicopter money has to come for companies and for entrepreneurs. And we all, to be honest, we as well in Spain, we expect much more from the European Union. And we expect more from the European Central Bank. So we are still confident because things will be much worse in Europe. It's been Italy, it's Spain, but very soon it will be France and Germany and other European countries, and the Netherlands and so on. So we definitely expect that that there will be more, let's say, aggressive and brave measures from the European authorities.
Okay.
Just to interject.
Go ahead, Rajeev.
Yeah. even the impact that is being seen on firms like us is going to be immense. Yesterday only there was a news where all the big four in India, the big four audit firms, have deferred their appraisals, deferred their increments, bonuses for this year. So, and all of us are facing this at the time when we have our year end, which is the most revenue intensive time for all of us. Now, if you lose the last 1.5 months of your year end, it means that you lose 1 quarter of revenue, and the costs are on. So the firms, all professional firms, are going to find it a challenging time to go through this, and I'm sure I can speak for all of us here.
Yeah, that's right. I mean, I think that one of the items that concerns me, and this is relating to our firm, but also just generally the economy, is a liquidity issue. And if you're not selling work and receiving cash for the work that you're doing, how do you pay your people and pay your rent and then other things? So it is definitely troubling.
Yeah, and actually for China, even China, the situation stabilized and the government want to resume the business. But if the whole world is stopping, actually we cannot produce anything if there's no orders.
Sure. Yeah,
So
that's a good point.
Yeah, we are already talking about whether we still can receive the Christmas orders in China for the overseas from overseas.
Yeah, I could imagine it takes time to put those orders in and manufacture the goods and ship them to the end markets. Yeah. In the U.S., there are some issues. You know, Sandra, I think you talked about this earlier around impairment that we're going to have to look at. I think at least as of 3/31, I think the thought process has been that there maybe isn't a material impact on value or a long-term impact on value. But I think the longer this process goes, the more we have to look at this as a longer-term impact on the economy, on our markets, and therefore on values as well. Are there items in your market that need to be looked at from a valuation perspective, whether it's around impairment studies or other things as asset values change?
Well, I think in our case, it's probably a little bit too early because, as you said, it's a matter of time. You know, for how long are we going to stay in this situation? I think that's the key issue. But I think that I think it will be needed to have a closer look to asset values, and all these kind of impairment tests. They will have to be done by the end of the year. Some of the valuation, the real estate valuation authorities already mentioned that we have to take into account the coronavirus pandemic in the values in this quarterly valuation basis. So probably, of course, not the ones carried out in March, but those carried out by the end of the second quarter. So that will happen, yeah. And this is going to be a big issue because there are many REITs, investing in hotel and leisure, and very specialized on retail, which are, of course, those kind of assets that are going to suffer more the impact of the coronavirus. So this is going to be a big issue for our clients. And for ourselves, of course.
Simon, how about in China and Hong Kong? Are there valuation issues that need to be addressed as a result of COVID?
Yeah, definitely. Yeah, and indeed, actually, we can see this events trigger a quicker transformation of the business, because in the past we actually value says the value for commercial buildings, especially the shopping malls, the retail business, they are already encounter the decreasing demand of this type of assets. And but through this COVID-19 virus event, people are pushing the people to do all their shoppings online. Yeah. So this create we believe even go back to normal. Their shopping behavior has already changed, and for the retail shopping malls, their value, we don't think they will go back to the past, but for the online business, actually they are doing much more business now. So their valuation, I can see, say Amazon, the share price of Amazon actually haven't haven't affected, and we believe similar things will happen in China, say Alibaba or say like Zoom and also other online business. Their valuation would increase after this event, but for other traditional types of business and also asset, their value will go down and may not go back to their previous values. The heavily affected at the moment is the hotel, tourism business, and then is retail and office building and restaurant, education. Yeah. So, but we can see now they have more online shopping, food delivery services, online meeting, and even online sports. So
I think
new
logistics,
Yes. The logistic would like the warehouse, like the data center. There people the investor are chasing for this asset, and their value have not dropped, and maybe indeed their value has increased. So it is quite interesting that the impact from COVID-19 not necessarily drive the asset value down. Some actually it benefit some companies, some sectors, and also some assets.
Yeah.
Rajeev, how about in India? Any impacts on asset values and any regulatory statutory work that needs to be done together with this?
Certainly, PJ, I would agree with Simon that every recession, hopefully not a depression, every recession would result in migration of values from some industry to others. Some suffer a permanent diminution in value, which would be a long-term impact. Some of them would have a very transitory impact on their values. Now, in terms of us as a professional, I'm sure next 6 months we are going to find very, very difficult impairment-related conversations. Now, many companies would ask and tell us, no, this is a long-term asset and this is an exceptional period and things will improve and you should look at the impairment this way or not that way. So we are certainly all of us are going to have very, very difficult conversations. Some of them may be correct because the value may come back. And we don't know, the value may never come back in those industries. But I think there is a growing clamor within the industry that the government should somehow loosen the impairment rules, that they should not force companies to book impairment losses for this exceptional event. That is a conversation which I see in newspapers and in headlines. This is an offshoot of what is happening with the financial system in India. Because government has allowed that banks and the non-banking financial companies they are exempted for booking certain kind of mark-to-market losses. So because of this exceptional period, you will not book a certain MTM losses. Even if there are certain non-performing loans, you will not recognize them, and you will provide for a forbearance for a quarter or a certain period. Yeah. Now, which effectively opens a window of opportunity for everyone. Because if you permit this for banks, if you permit this for financial institutions, why not permit this for corporates? Right. Why should they book impairment losses, and why should banks escape from that? So I believe things will get clearer on this front as we go along. But we all are going to have difficult conversations with our client. I can already foresee that.
Sure, yeah.
And, I would like to add that if you take into consideration that one of our biggest and the most important industry in Spain is tourism. We receive more than 80 million.
Sagrada Familia.
Every year. This is a real industry in our country. So that's the reason why this impact is going to be dramatic, from that point of view, because tourism, hotel and leisure are, at the first line of the impact. So that's going to be very tough for us.
Any final thoughts? Maybe Rajeev, we start with you before we end the call.
Well, we are still waiting to see the final impact and how all this will play out. As I said, we are in our region still in early days, and we are hoping and praying, looking at what's happening in Europe and US, that this does not hit us as badly as it has hit you guys, and we pray for you too. But I believe the last word is yet to be written. We are in the midst of it. We are in very, very early days. If we are lucky, we'll escape out of this in 1 quarter. That's the best case scenario that we are looking for. If things go wrong, we don't know how things will end.
Sure. Sandra, how about yourself? Any final thoughts?
Well, we look at China every day. We look at how many days, how many weeks, and how things are working after the peak. So we are really looking forward to have the situation as soon as possible. As I said before, we are really looking forward to more, to seeing more and receiving more economic measures from the European Central Bank and our own government. It's not enough what they have done up to now. And regarding business, we just can say let's hope for the best. But right now, to be honest, business is not the most important thing because there are many people infected and a lot of people dying every day. So we just pray for the best.
Sure. Simon, any final thoughts?
I want to comfort everybody that it will go away. And from our experience, when you take it serious, in 2 months' time, it will go away. So just be patient and enjoy the family time at home that maybe you cannot enjoy in the past, but this is could be a quite a good opportunity for you to get more bonding with your family, and it will go away. And but the business, the landscape of the business, I believe, will change, and we need to adapt to this new environment. I would say this is also a kind of new economy environment, and just like now we are having meeting online. I believe in the future this is a normal thing. So we will do this every day. Right. And there are more new business emerge after this event. Yeah.
That's right. That's right.
Kevin, anything to add? to that?
Perhaps I can also add that more than China, we can also see that in Japan, South Korea, Taiwan, they are all like doing fine now after the first 2 months of bad times. So yeah, what Simon says is right. It will go away very soon for all of us.
I think 2 months we can deal with. Longer than that would be difficult. Okay, thank you all. Good catching up.
Thank you very much.
Thank you.
Okay.
Thank you.
Yeah, thank you all.
Thank you.
Thank you.
Thank you. Thank you all for taking the time to speak with us today. And for those of you who are watching, we certainly welcome you to connect with any member of our panel or your local VRG professional, which of course can be found worldwide. We welcome you to visit us at vrg.net. Thanks.